Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, April 12th, and we've got a few economic news releases scheduled for today. We'll start off with the weekly jobless claims we get every Thursday. Last week we had 367,000 people applying for unemployment. We figured that number would tamer down a little bit, down to about 359, and actually went up a little bit. So we had a little bit of a spike on people applying for unemployment this past week. And then the next item to note is the producer price index, which for March, and what that is, it's the inflationary numbers on the wholesale level. So this doesn't always get passed on to consumers, so it's important to look at, but more importantly, they look at more consumer inflation. So, but it is something to kind of keep an eye on. And that number came in back in February at 0.4%. We figured it would come down in March, and basically came in at 0. So pretty close expectations, but not quite. So it came in at 0. But when you take out the volatility of food and energy, we get the core PPI, and that's the main number that we look at, because you don't want the volatility in there, which can obscure the numbers a bit. So we had back in February 0.2%, and then we basically thought it would remain about the same for March, that we would have about 0.2% growth in March, and it actually jumped up a little bit more. So the producer price, the wholesale inflation went up slightly, but still within range, something to definitely keep an eye on. Now the next item here is not a real important one, but definitely want to keep an eye on, is the trade balance for February. Back in January, we had a negative $52.5 billion deficit when it comes to our trade balance. We figured that would close in a little bit to 51.2, and actually dropped down to 46 billion negative. So pretty big drop there, $6 billion, $6.5 billion is a pretty big drop in the trade balance. So that's kind of good news right there. Now we'll jump over to the headline news and see what the stock market's doing. Right now the stock market's having another rally, and what they're primarily looking at today on the stock market is the investors are seeing lower yields going on in Europe, and then also some data came out in China where it indicates that they're going to have a soft landing versus a hard landing in China in regards to their economy over there. So concern obviously is that we can kind of weather the storm a little bit with Europe, maybe another recession, but China's having a hard one that we're going to get caught in between there, and probably it would drag us down a lot further. But because it looks like China's having a soft landing, Europe is settling in a little bit with lower yields. So we don't have to worry about more defaults on their debt. So right now there's a little bit of calm in the water, so to speak, and the equity markets are kind of like in this news. So we'll jump over to the bond market and see what the interest rates are doing. So basically today we started the day up about 12 basis points higher, so we touched the ceiling, and right now we're actually working our way down. Right now we're down about 21 basis points. So right now interest rates are a little bit higher today versus what they were yesterday, as the bond has kind of dropped a little bit further, and we're testing the floor right now. And as I mentioned before, we have a couple opening gaps that haven't been closed yet, so at some point those will be closing. We'll need to close for us to sustain any level of any rallies, or even potentially we could drop some more. So right now interest rates are a little bit higher from what we were at yesterday, and so we'll just keep the news for tomorrow. I will see you tomorrow. Have a wonderful day. And also stop by mikesdailymarketreport.com and subscribe, get your free daily update emails. Have a wonderful day.